If you own a business and expect to owe $1,000 or more in taxes, then the IRS expects you to pay quarterly estimated taxes. This fact catches a lot of business owners, especially new business owners, by surprise. Because when you work for someone else, as an employee, for example, your employer is responsible for withholding your taxes and submitting them to the IRS and state. But that changes when you work for yourself. As a business owner, you have a lot of new responsibilities ranging from selling your products and services, marketing your business, customer service, and so on. Just make sure that calculating and paying your taxes is also on that list. And the great news is that if you don't know where to start with paying your estimated taxes, this video will help you understand how to determine how much to pay and when to pay your estimated taxes. I'll even show you where to submit those payments. If all of that sounds good to you, please do me a favor and like this video, and don't forget to subscribe if you haven't already. I'm Crystal A, CPA, here to help you build your wealth and reduce your taxes. So make sure to comment any questions or comments you may have throughout this video. The very first thing you're probably wondering is, how do I figure out how much in estimated taxes to pay? First, you need to understand that your estimated taxes are an estimate. There is a very small chance that anyone, including employees or business owners, pay the exact tax that they owe the government. If that was the case, no one would receive refunds or owe additional taxes when they file their tax return. So knowing that your estimated taxes are an estimate and the IRS knows it's an estimate should hopefully relieve you of some of the pressure to get the numbers perfectly correct. With that said, I would recommend using IRS Form 1040-ES to best estimate your taxes due. In order to calculate your taxes using Form 1040-ES, you need to figure out your expected adjusted gross income, taxable income, deductions, and credits for the year. As a starting point for the current year, it may be helpful to use your income, deductions, and credits for the prior year, especially if your income or tax situation hasn't changed much. To do this, just take a look at your prior year tax return and look for the line items titled Adjusted Gross Income and Taxable Income. You would start with your adjusted gross income when completing Form 1040-ES. If you don't know what your adjusted gross income was from last year, or if you expect this number to be significantly different, you can calculate your AGI by adding up all of your wages, investment income, business income, and any other income you expect to have during the tax year. Then you would subtract any adjustments to your income you expect to have. Adjustments to income can include educator expenses, student loan interest, and retirement contributions. Once you have your AGI figured out, you would need to know what your deductions for the year would be, or your best estimate of your deductions, and after applying those deductions, the result would then be your taxable income. Once you have your taxable income, you would use the IRS tax rate schedule, which looks like this, to estimate your taxes for the year. This schedule shows the income tax brackets and the income tax percentages associated with each income level. Finally, if you're a sole proprietor, partner in a partnership, or S corporation shareholder, you would have to add in your self-employment tax. This process is much simpler to figure out. You would just need to estimate your business profit for the year, so revenue minus expenses, and apply 15.3% to that number. Self-employment tax only applies to the first $147,000 of business income. So if you expect to earn over that amount, only consider the first $147,000. So putting everything together here to figure out your estimated taxes, determine what your AGI and deductions are, and use the IRS tax rate schedule to compute your federal income tax. Then add in your self-employment tax based on your business income and 15.3%. The total of these two numbers is what you would estimate your tax bill to be for the entire year. So from there, just divide this number by 4, and this represents your quarterly estimated tax obligation. Simple, right? If you think you need a little more help with this and also want to permanently reduce your taxes, I created a 5-hour course to walk you through things like this and the most efficient ways to reduce your tax bill. If you want access to the course, private trainings, and live Q&As with me, just go to mycpacoach.com to learn more. But if you do want to try to estimate your taxes on your own, don't worry. There is another option that will satisfy your estimated tax obligations. And that is to pay at least 110% of last year's tax. And here's what I mean. If according to the tax return that you filed last year, your total tax bill was $1,000, 110% of that would be $1,100 or $1,000 times 1.1. Then you would split that amount into 4, or $1,100 divided by 4, which equals $275. $275 would be your quarterly estimated tax payment. When you pay at least 10% more than your previous year's tax, you will be exempt from the estimated tax underpayment penalty, even if you owe additional taxes when you file your tax return. Paying 10% more of last year's tax demonstrates good faith and paying your taxes in the eyes of the IRS. Regardless if you estimate your taxes using Form 1040-ES or the 10% more method, your payments will go to the same place. To pay your estimated taxes, go to irs.gov, navigate to the Pay tab, and select your method of payment. Select Make a Payment and choose your reason for your payment. In this case, it would be estimated tax, and it would be applied to your 1040. And lastly, the tax period would be for the current tax year. You would then follow the prompts and enter in the amount you would like to submit as your estimated tax. You would do this process 4 times a year, and the IRS has specified the due dates for quarterly estimated tax payments. And for tax year 2022, those are April 18th, June 15th, September 15th, and January 17th. So the due dates tend to be about 2 weeks after the quarter ends. If you don't make your payments by these dates, the IRS may penalize you, so make sure to get your payment in on time. Do keep in mind that after you start paying your estimated taxes, you should be sure to keep a record of the dates you made payments and how much you sent in, because these payments will be applied as credits on your tax return once you file, and you want to make sure you get the credit for the payments that you've made. All right, guys, that's all I have for this video, and I'll see you in another one.